We're starting a new week, August 19 to August 23rd. It's going to be pretty. I'm not expecting that much volatility for this week. All right? I'm not expecting crazy prices, moves ups and down, but more as a directional market. Okay, I've warned everyone about the strength of the euro last Thursday. I've warned about that, and that's exactly what happened, right? If we look at euro dollar at this moment, right here, where is this now? That's the 4 hour. Let's go for the 1 hour. Sorry, 1 hour. There we go. So last Thursday we had the market somewhere here. That's Friday. That's Thursday. Okay, beautiful. Okay, that's when I was talking about. Okay, we had this drop. Hi guys, hello sweets. Bon dia. We had this drop here, 194.54. Right. So we had this drop pretty much 1%, I would say, right, around 1% to 0.8%, and then I had a take profit here at 156, if I'm not wrong. Yeah, 156. So we got take profit on this trade. Same goes for pound dollar. All right. Yeah, that was a good trade. And same goes for the pound dollar here. We did have this. Well, we're getting in TP because I've mentioned about TP on the high here. Around this high is at 1.3043, 1.35, 1.35. Yeah, I think 1.30, 1.305. I mean, not 135, 1.305. So there was a pretty decent trade as well. That's a decent move. I think everyone should be happy with those trades. You know, very, very simple analysis behind everything. So that was pretty cool because I've catch these whole move down live with everyone, and then I've catch this whole move up as well with everyone. So that's sort of the content that everyone is missing when they are not joining the webinars, right? I think we were somewhere here when July, 25th of July, somewhere around here on Thursday, 25th of July. I've mentioned about this trade, potential trade on short, all the way down to this box area. Okay, and that's exactly what happened on here. And then I've mentioned, yes, we have another box here, but that's a different way. For those who are not familiar, let me just delete this one, otherwise it gets too confusing. There we go. So when we have, let me get my pen. When we have a okay, so lots of people ask my strategy, right? What's the take profit strategy? We're nearly hitting 200 subscribers on Telegram, so I think there's only a few, 2 or 4 people to hit 200. Yeah, there's only 4 people left to hit 200 subscribers, so we're very close. Once we hit 200 subscribers, there will be a webinar dedicated to the second part of the strategy. That is purely going to be talking about how to set up the trade. But just say sneaky peeky on my take profit and stop loss. I would say way how do I do it is pretty simple. So we need to understand that the market goes into phases, all right? And most of those phases has a duration, all right? And those durations are usually between 7 days, so a week, but you know, a business 7-day business day, so Monday to Friday, and then Monday and Tuesday. And usually there is a change of direction on the market. But yes, this is not 100%, as nothing it is on the market. Is you need to understand context, all right? You need to understand how to put it up the fundamentals in a way of that you can predict, in a sense, the the move of the market. So tonight we have Europe CPI. Okay, so remember what I've just said. Euro has usually 7 days of uptrend, right? We are on the 7th day, so probably today we'll still have up move to happen on euro dollar, for instance, right? Someone is trying to show us some drawings. Just joking. As we're saying, you know, we still have 2 days to go for the uptrend to finish on euro dollar. Sorry, 1 day to go for the euro uptrend to finish on euro dollar. But it's not a certain thing. Okay. But anyways, I will explain that once we hit 200 subscribers. So make sure to invite your friends. So we have 12 people right now here. So if each single one of you invite only one person and that person joins, we already have 12 more and we only need 4. So if everyone makes some effort to grow our community and help us to grow the community, then of course you will be rewarded in the next few weeks. All right. Anyways, so the way the market moves for me is impulses and retractions. All right. And then it gets impulsed again and then some retractions. And then there is a time that the market just continue. You know, that these are usually the 7 days. Okay, this part. And then we have a change. So when and how do I set it up, the stop losses and take profit, is when we have a change of high highs and low lows. That's pretty simple, right? This is actually very, very simple, but it has been working. So you know, I have track record for that. So whatever. So we have the first take profit would be on this area. The second take profit would be on this area. All right. If it happens the opposite, okay. So if it happens, let's say, oopsie, sorry, another way. If we go like that, okay, my take profit would be here. Okay. Usually it tends to come down to the 50% of a area that has been consolidation. So pretty simple, okay? We don't have to go that far to analyze these things. Let's just have a look here on euro dollar, for instance, the most traded currency in the world. All right. This is a 1 hour chart. And you can do that on whatever. You can do that in 1 minute. You can do that in 5 minutes, 15 minutes, 1 hour, 4 hours daily, weekly, monthly, anything, right? So, okay, this is a beautiful example. We were going up, right? And then we've changed. So we were making higher highs, right? And then we broke the low. Right? I think most, or should everyone understand, or if you're new to trading, that's completely fine as well. But the market moves in 3 directions pretty much, right? Up, down, and sideways. So up, down, and sideways. All right. So when the market is moving up, it's making high highs, right? Here, this is a high, and then this is the higher of this high. All right, that's confusing, but it is what it is. And we have the lower low. So this is low, this is another low, and this is lower than this low. Okay, and then it goes from there, and then we have a higher low, and then it goes, you know, like a little stair. Did anyone say anything? No questions? Okay, all good. If you have any questions, guys, just please unmute yourself. You can talk to me, or either way, you can just send the message on the chat, and we'll have a look once I have a time. All right. So as I was saying, market moves in three directions, up, down, and sideways. Also, it's moving up. We have high highs here, here, and then this is a high, and then we're projecting a low, and a continuation of a lower high, and then it goes up. And then we have the other way that is down, lower low, and then higher low, and so on. Okay, and then when we have a sideways, we just have sideways, up and down, up and down, up and down. Let me delete these all. Okay, and right here, what we were having is we're having high highs. Okay, how do I know this is a high, and how do I know this is a higher low? Pretty simple. Once we have a pullback, okay, and the market continues to go up and break this high at this high point, this is considered now to be the highest point of the last trend. That was this one. Okay. Then we go for the impulse, and then now we have a pullback. How do I know that this is a high? Again, if the market comes, break the top, then I know. All right. How do I know that the market is changing direction? Well, if we break the low right here, I know that this trend, this uptrend, is not sustainable anymore. Okay.
It's break of structure.
Yes, it's a break of structure. Yes, some people call break of structure. Okay. Break of structure. They call this the BOS, if I'm not wrong. I don't go for those names, but it's just a fancy name, I think, to use, but it works anyways. So here is the low with, yeah, so here's the low, and then we break that, and then we come back to retest that break, and then continuation to downward. But now that's the point, right? I start to monitor the market, and I was like, okay, this is a little box here. This is a bigger box, but still a box. And this is another box. Okay. We have three boxes on this down, little down. This is just a pullback, but still, okay. Now, I could trade, you know, I could somehow trade this whole up move and put my TP here and here, or either here if you enter on 5 minutes, let's say. And then what you're going to be looking is the exactly same thing that we've just saw here on a bigger picture, but down here. I'm sorry, no, this is too big. Too big. All right. It's something like that. No, that's completely wrong. Let me try to find this on the chart so everyone can understand better. Let me first isolate this area. Let me change this color to red so I can see better. And 5 minutes. I think there is perfect. Okay, cool. So here we are, right? So this is the small box right here. This is the somewhat big box. This is the other box, the last one we had on the bottom, the very bottom, right? And here we have and here we have, this was on a Monday. What was that? That was Friday, and that was Monday. Okay, so we're missing a bit of pricing here. This is euro dollar, guys. Euro dollar on the 2nd of August. 2nd of August on euro dollar. Right, so here we had the move down, okay, and then the move up, but we haven't continued to go down. We haven't break this low. Okay, so technically we're still on a pullback. All right, we're not in a continuation because the trend only continues when we had the pullback and then a break off the low of the pullback. All right. Once we had break this pullback, once we had break this low, then yes, the market will get more stronger on the downtrend. Okay, so we haven't had this break here. Okay, this is the lowest point that we got on the pullback, and since there we haven't had any continuation down. But if we look from here to here, this is the move down, all right, and this is the pullback. Now we have a good question. What if it wicked? It's this is very personal. Okay, this is very personal, but I don't count a wicked. What I'm, maybe someone are not understanding, but let me represent here. Let's say this is the lowest point. Okay, this is the lowest point. This is a wick. All right, it's basically the wick of the candle breaking the low point. All right, but not the actual candle. I don't count this as a break. It's just my personal take. What I count as a break is this is the low and this is the actual break. Okay, because if we count this as a break, look at what it could potentially happen, right? Some people say, look, this could be a liquidity take or whatever. I just don't take this as it is, because there is liquidity everywhere in the market, so there's no need for a big player to come and stop you out here to get your liquidity off whatever money you have there. But some people tend to believe on that, and that's completely fine. So here is not a break for me. All right, so this is not a break for me, just because there is no break. There is only a tentative of break. All right, so if there is only a tentative of break, why should I count as a break if it's only a tentative? So they've tried, the sellers have tried, but the buyers is still interested and continue to long the market. And that was pretty much the fight. Buyers were much stronger than the sellers, and they took off the advantage. And there was more people trying to buy than selling, and therefore the people that were trying to sell becomes the liquidity of the market, and the people who are trying to buy becomes the person in dominance of the market. But later on, this has changed again here, and then we go down. So just answering the question, Sweets, no, I don't count wick candles. I do count the full body candle. All right, especially if it's an actual really big candle going down or up, whatever, and breaking through. That's really good in my opinion. We sort of have a little bit more certain on a movement. All right. Anyway, so as I was saying, we have the highest point of this whole move down here as this 184.80, and the lowest point as the let's call it 1775. All right, 1775, 180.80, 184. And then we had a pullback, and then try to continuate the trend, but we haven't break through here. Okay, then what we've done a break through this area. So once we break this point here, now we are on an uptrend. So the move that we pretty much doing is something like that, and here, and then break this low, and then break the high. Okay, so now we are not going down anymore because we've brought we break the high point, and we're looking to go up. All right, that's pretty much it. What I look when I'm trading those boxes. I like to call boxes, but you can call whatever you feel better. Just again. Right, perfect. So that's just a little introduction, I would say, on the 2.0 strategy that I I'm very eager to show to you guys. So once we hit the 200 subscribers, I will definitely prepare some material and put it up there for everyone. Okay. Now, let's see what we got on the economic calendar for this week. All right. Pretty cool feature from FinLogix. You can just come here. Let me share this link for the economic calendar for everyone here in the chat. So you can come at FinLogix website and click on this weekly highlights. You can download if you want and send to your mates or whatever. Get it for you, print it out. But pretty much what we have is what we had already was the Australia RBA meeting minutes. It's not showing here, but we're gonna have the come back to this page. There we go. And then here as well this week. So we have euro inflation rate. Okay. Year over year, month over month, and the core year over year as well. All right. The expectations are that the year over year, the inflation, just the normal CPI, we get a little increase, a little jump from 2.5% to 2.6%. And this is taken as if that happens, is taken for the euro as a bullish move. Okay, because ECB is trying to cut the rates, but there is a very sticky inflation. Okay, 0.6% still have to decrease. Same goes for the Fed. All right, the whole up move on any currency backed with the US dollar tends to be just depends from which currency, sorry. But it tends to be because of the weakness of the US dollar. Okay, so if we look at the US dollar index, right, the USD index, the DXY, we're looking at a 7-month low. All right, so we've pretty much been the whole year on negative for the DXY. I'm going to show this in a minute, but what are we looking at is the FOMC trying to cut the rates. All right, so we had yesterday the Fed Waller, all right, just 11:15 p.m. and most of the market participants were waiting for that event. And the reason why everyone was waiting for that event is because we don't have FOMC this month, the month of August. We don't have FOMC. We only have in September. But what we have is the FOMC minutes from the 31st of July last month. Okay. And it will be released this week on Friday, if I'm not wrong. Oh, let me just double check here to not give everyone a, yeah, there we go, FOMC minutes on Thursday. So it will be released 4 a.m. on Thursday, Australia time. And so that's going to be pretty interesting to see. So as I was saying, so as we don't have that Fed, that FOMC meeting this month, all of the market participants were awaiting for the Fed Waller give his speech. And you know, some points came up very interesting. Some points were a bit of a waste of time to watch, as you know, everything with the FOMC with the Fed is like that. But we have to extract what is good to us. So what was pretty helpful, a good hint, is that yes, they are looking to cut the interest rates in September. And that's not more a if question, and that is already a yes, we're gonna do. Just depends about the NFP. All right. So September 18 is the date of the FOMC decision rate. That's when they will decide if they cut, if they hold. I don't know, but if they hike, I'm not too, let's say, believing on the hiking potential, but whatever. Well, yeah, a bit sleepy. So the whole thing about the FOMC has been clarified already from Waller yesterday. And yes, they are looking to cut, but they still have a lot to do, as always they say. But in my opinion, this will generate even more even more weakness to the US dollar. So we are looking at, as I just say, 7-month low US dollar index. So the US dollar value is decreasing. And we can see that, we can see that even through Australian dollar. So if I come here, AUDUSD. So Australian dollar is stronger than the US dollar. So we can see right here, after this big decrease, all right, this huge decrease all the way up from, what price is this? 68, all the way up from 68 cents on the 11th of July, pretty much 12th of July, actually. That was 11 and 12. That was pretty cool. But anyways, so all the way down to 63 cents, and yeah, 63 cents. So pretty much from 68 cents to 63 cents, so 5 cents of difference. That's a pretty big drop on Forex. All right. Now we are pretty much recovering everything. We have been, battling and the RBA on last Friday. Michelle Bullock, for those who don't know, Michelle Bullock is the, let me just write it down, Michelle Bullock. That's her. She's the RBA Reserve Bank of Australia chair. All right, so she takes care of everything that happens on the Reserve Bank of Australia. And she has said that they are not in time yet to cut the rates, and that they have a lot of job to do, and that inflation is sticky, and they will continue to maintain higher rates for longer. But she hasn't hesitated, or she haven't talked about hiking rates as well. So in a sense that the Australian dollar is getting stronger, it just depends on which currency you're backing, all right? Because if we look for Euro AUD, we have the completely different scenario, right? Euro was stronger, and then now Australian dollar is taking over again, right? But it's not that strong as AUD USD, if we look, all right? Yeah, that's a very sharp recovery. We're nearly done 8 cents again in a matter of 5 cents again in a matter of less than a month. What we've took pretty much 2 months to do, we've just done in a few days, a couple weeks. So anyway, so that's my take on the Australian dollar, right? Yes, strength ahead, a lot of strength ahead. Depending on what the the FOMC will do with the rates. So if they cut, if they actually cut, if they come to the next month, 18th of September, they say, look, what date will be 18th of September? Let me check on my calendar. 18 will be on a Wednesday in Australia. Oh, wow. Okay. It's going to be interesting. So on a Wednesday, I think we've never had on a Monday. We've had on a Tuesday, but we haven't had on a Monday. Yes. Any questions? Yeah. Questions? Okay. So it's going to depend on how the FOMC will cut. All right. And we have a question just right there. So once US dollar cut the rate on September, do you think that other major currency would cut the rate? That's a really good question, actually. And that's the question that it's going around everywhere, because everyone takes the US dollar as the holy grail, right? We have actually the US dollar as a huge safe haven. But I'm going to say to you what the central banks say. They are an independent organization, and they don't need to look at others to see what they have to do. So, but my opinion on top of that is that, yes, they have to look at others and see what they're doing. Sorry, guys, I'm just going to mute someone because it's a bit Yeah. If you want to ask any question, that's fine. You can just unmute yourself and ask the question. Thanks. So as I was saying, the whole thing about if one central bank takes the other central bank as a mirror and try to do exactly the same thing, in a sense, yes, but they can't as well, because every economy is different from another economy. So let's say, okay, let's just pretend this is a fantasy word. So we have FOMC cutting the rates in September, and then RBA looks at it and say, oh, wow, the Fed is cutting the rate. I think we're going to cut the rates as well by 25 basis points. But then what happens is that the USA is with 3-point-something% inflation, and the RBA in Australia, sorry, is with 4.8% inflation. So there is a discrepancy of 1% inflation. Yes, it's a small number, only one, right? 1%. Yeah, it's really pretty small. But when we look at that, how long does it take to bring 1% down on inflation? You may be like, whoa, wait a minute. So that is quite a lot of inflation still, right? Because we need some stance of inflation in some understanding for the economy to work in better phases, but not 5%, not 4.8%. So it's still a lot to do for the RBA. But yeah, that's my opinion on terms of if one central bank cuts, does the other one cuts? It depends. It depends. It will depend on each economy. So if that happens, Euro, New Zealand dollar, Australian dollar will fall sharply, right? You mean if the US dollar, if the FOMC cuts, then you think that Euro, New Zealand dollar, and Australian dollar will fall sharply? Just reintegrate this question for me, because it's a little bit confused on that. But thanks. Yeah, okay. If the FOMC cut, then the Euro, New Zealand dollar, Australian dollar will fall sharply. No, that's actually the opposite, because if the FMC cuts, then what is representing to the real investor in the end is that the money that they put it up on USA, it's not giving them that much back as it was before. All right, so let's say it's 4.25%. That's the official cash rate. Okay. But what the bank asks the lenders, what the banks ask for mortgages are at 6.5%, because we need to understand something. All right, the bank word works. It's pretty simple, and it has been like that for hundreds and hundreds of years. So we have the central bank that gives money to commercial bank. Commercial bank give money to us or business. All right, retail people, wholesale investors. To buy property, to buy car, to buy personal things, to whatever, buy whatever you want if you have credit score. So if you go to the bank and say, look, I need $100,000 to purchase a property, not in Sydney because you don't have $100,000 properties here, but whatever. So $100,000 to buy a property, the bank will do their process. They will look at your credit, they will look at how much you're getting paid, if you will be able to afford to pay monthly installments or weekly installments, whatever you choose, and they go from there, right? So you heard in the news that the RBA, right? This is an Australian example. So you heard in the news that the RBA has a 1%. So let's just facilitate here, 1% interest rate. All right, cash rate. You think, well, 1% is nothing, right? 1%, it's beautiful. You go to the bank and then you ask for the money, you do the whole process, and now that 1% is actually 3%. What happened? Wait a minute, it wasn't 1%. Why is 3% now? Well, the commercial bank has to make profit because they're taking a risk in some instance because they still have your asset, but they're taking risk to give you the money. And if you don't pay, then what happens? They take your property, right? All right. So that has been said. It will depend from person to person as well. If the rates are high, if the rates are lower, it all depends. There is a mathematical calculation behind it. I'm just can't remember right now, but they take They take fixed income plus risk variable plus yeah, they have some other things. So that's how it works. If investors look at it, well, it was 2%, now it's 1%. Why should I put it in the US dollar? Why should I put in USA? Can I put on euro that is still maintaining higher than USA? Yes, I can. So the exactly opposite thing will happen. So euro will strengthen, New Zealand will strengthen, Australian dollar will strengthen even more. Okay, because as we just had yesterday, last Friday, Michelle Bullock saying that they won't cut the rates this year. Same, as New Zealand dollar has cut. BNZ has cut, euro has cut, USD has cut. So Australian dollar is getting strong. All right. AUDCHF. Yes, I will do an analysis on AUDCHF. Sorry, Santi, did you get it or was a little bit too confused? If you think that this is too confused, just let me know and I'll try to explain in a better way for you. But I think it was pretty clear. All right. Okay, cool. Awesome. All right. Not a problem. So Abdali, I will just finalize the economic calendar here and then we're going to go for AUDCHF. So on Tuesday, that is today, what I was just saying, we're going to have euro area inflation. And then later on, we have 10:30 p.m., we have Canada inflation. Tomorrow, we don't have much. All right. We have Bostic giving a speech. And then we have German 10-year bond auction and the balance of trade for Japan. I've explained already what's balance of trade. If you haven't been here on last Thursday webinar, just go to the YouTube channel, ACY Securities YouTube channel, and you can watch the whole webinar in there. On Thursday, we have the FOMC minutes, as I was saying just in a few minutes ago. We have services and composed services and manufacturing PMI for France. And then the manufacturing PMI and the Australia Judo Bank Services PMI for August at 9 a.m. And later on the day, we have PMI and manufacturing services PMI, manufacturing PMI for Europe at 6 p.m. And then later on in the day, 6:30, we have from UK. And then we have the monetary policy meeting accounts for ECB. And manufacturing and services PMI for USA. And then on Friday, we have consumer confidence for euro area, Japan inflation rate. That's going to be very important. If the inflation rate comes in at 2.7%, sorry, 2.9% as the year over year, as they are, that's what they are expecting. But the previous was 2.8. So from 2.8 to 2.9, that's a 0.1% increase. If that actually happens, then there is even more chances of the Bank of Japan continue to hike the interest rates and make the Japanese yen stronger. All right. If we have time today, I'm going to touch base a little bit on the Japanese yen because maybe someone has some questions about it. And then on Saturday, Saturday is just Saturday. We don't have anything, but we have on Fridays to Canada retail sales, and we have retail sales excluding automobiles as well. All right. Any questions about the economic calendar? I think, as I say, it is a somewhat busy week, but it's not that busy, not that volatile, but much more of a directional market than anything. All good? Okay, so coming back to the charts, AUDCHF, 1 hour. What I can see from Switzerland, right? CHF. As I was saying, Australian dollar is very strong. Australian dollar is maintaining a footpath. It's going pretty good just because last Friday, even more because last Friday we had Michelle Bullock coming in directly from Canberra and saying, look, we're not going to cut interest rates. We're going to maintain it higher for longer. We're not going to cut this year, she say. We were going to maintain it for longer. So this made, of course, all the market participants eyeing the Australian dollar and try to capitalize on this phrase that she said on, not cutting the interest rates. Because But why did that make so much effect on the market than, for instance, an FOMC? The reason was, I don't know if you guys remember, but a month and a half ago, we had some analysts from ANZ, Australian New Zealand bank. Can't remember who it was, sorry. But anyways, we had some analysts around Australia saying that yes, the RBA would cut, and then everyone's starting to think the RBA will cut. And the Australian dollar made this move, all right? Because of inflation and etc. Then the actual person that knows if they will cut or if they will hike or if they will do another pause comes into play, and she say, look, we're not going to cut, and then the market continues to reverse. So that's the whole interplay between Australian dollar at this moment, all right? And then we go for CHF. So there is a very cool tool here on FinLogix. That's the interest rates tool. So if you look here, just down at the right, so you scroll down everything, go into economic calendar and scroll down all the way until it appears. Okay, so like that. And we have all of the G10, sorry, G8, 1, 3, 6, 9. That's 9. So, but it's G8 countries. So USA, Switzerland, New Zealand, Canada, China, Australia, Japan, Euro area, and UK. So people saw the rumor and bought the news. Yeah, that's exactly it. That's exactly always like that, isn't it? It's always like that. So people saw the rumor and bought the news. That's exactly it. Anyways, so as I was saying, USA 5.5%, the actual Switzerland 1.25, Australia 4.35. Right, so that's the whole difference. So Switzerland is 125% of interest rates, and Australia is 4.35% of interest rates. If you have money, where should you put? I mean, that's a simple question on Australia. Okay, and even more now that you know that they want cut coming from the actual RBA, not coming from me or from whatever. All right, it's coming from the actual RBA. You can search that on YouTube. You will definitely find. Just put it up, Michelle Bullock, Canberra. What was that? 16, I think it was 16 of August 2024. A speech on inflation. Right, you will find that. You can have a look later on your own. So now talking about here, AUDCHF. If we put on the 4 hours, we can see that this was a massive drop. Right, this was a massive drop. And we still a lot to recover. We're not even 50% in there. In terms of recovery, I don't see any point of take profit in this instance. Let me just zoom out a little bit more. Okay, so the actual take profit would be, as I say, the box is here, and then this is the higher points of the box. So the take profit should be here, but still we haven't yet reached there. But you need to analyze your risk reward. All right, I wouldn't trade on this one because it's not too clear. All right, but that's my analysis on AUDCHF. I hope I helped. Now we still have 10 minutes. I'm going to talk about USDJPY just for the last thing of today. Did I answer your question, Abdali, about AUDCHF? If yes, that's good. Otherwise, just letting me know, and then I can try to redo that for you. All right. Let me give a sip on the water here, guys. Just a minute. All right, cool. Actually, it's not water; it's Coca-Cola, but what? All right, USDJPY. What a tricky one to trade. One day is going up, another day is going twice down. Right. Bank of Japan has been a bit silly in terms of letting investors know about monetary policy. Since I've started trading, It was much easier to trade Japanese yen than nowadays. Okay, it's very hard to trade Japanese yen at this moment. Because one day they're talking about hiking interest rates, another one they're talking about forward guidance, and another one they're talking about we're not going to do anything. Another one is talking data dependent. So very hard. But in general terms, Japanese yen, it's very strong at this moment. It's falling a very strong stance. And will probably continue so. All right. Let me put this in a 4-hour chart. There we go. So we don't have any more targets to go here. That was gonna be my last target. Yeah, my last target was somewhere around 141. Yeah, 141 would be my last target. But if we go for the 50-minute, we have a small trade that can happen here. Okay, so from this area, oops, sorry, that it's a good actually small trade, but still very close to take profit as well. So it's going to depend on the risk tolerance of the trader. So talking about USDJPY, the market was a bit happy that they could capitalize on the whole move because yes, once we look here for the 4-hour, we can see that yes, this is a huge move down and everyone is expecting another huge move up like that, and they're ready to buy down here. But still, Japanese yen is too strong for that. So use risk management on trading with USDJPY. But if it gives us a long opportunity, a long opportunity, that would be a lovely long opportunity. Okay, guys, thank you so much for today. If you have any questions, please send it through. Otherwise, we're going to finish for now, and I see everyone on Thursday. So just a heads up, Thursday September Thursday's webinar will change time. It will be exactly time as today's, all right, 5 to 6 p.m. All right, so on Thursdays from September, all right, so from the day of from the 5th of September, all right, from the 5th of September, that is the first Thursday of September, we're going to have webinars from 5 to 6, not from 7 to 8 anymore. So just repeating, note it down, from the 5th of September, right? That's the first Thursday of September. We're going to start having webinars on 5 to 6 p.m. Only Thursdays, all right? Tuesdays we'll maintain the same time, 5 to 6 p.m. All right? Okay, no questions, all good. All right, guys, thank you so much for coming today. Hope everyone liked it. Stay tuned with the videos on YouTube and invite your friends to the Telegram. So then, everyone can have a quick strategy guide. Thanks, though. Have a great week ahead, and check with everyone on Thursday again. See you. Bye-bye.